Like and subscribe to my channel and click the bell icon to get new video updates.
Ultra-short government bonds rally on banks' contagion fears. Banking contagion has officially spread to international markets, raising fears that last week's dramatic collapses by U.S. lenders Silicon Valley Bank and Signature Bank could be just the beginning of another global crisis. Stocks Credit Suisse Group, one of Europe's top 20 banks by assets, plunged more than 32% in intraday trade, hitting a new all-time low after reports reported the Swiss bank continued to see depositor outflows. Government bonds fell to their lowest levels in months on increased safe haven demand, with 6-month yields trading as low as 4.5% on Wednesday, while 1-year yields fell almost below 4.0% for the first time since October 2022. Thanks of tax incentives for people banks received in 2020 and 2021, a lot of new deposits, and the banks used those deposits to buy a lot of securities that weren't very profitable at the time. After a year of rapid rate hikes, the prices of these fixed income securities are now lower than when the banks bought them. Remember that yields and prices go in opposite directions. This means that U.S. banks now have huge amounts of unrealized losses on their books, all in all an estimated $620 billion. To clarify, these are assets that have lost value due to rising interest rates, but have not yet been sold. As Alden points out, banks should be fine if they hold these securities to maturity and get their principal back. But not every bank is able to do this. The problem is that when there's a bank run and depositors try to withdraw more cash than the institution has on hand, it may be forced to sell its deeply discounted bonds, thereby incurring losses. This is exactly what happened to the SVB. To fund the redemptions, the bank reportedly had to sell its $21 billion bond portfolio at a $1.8 billion loss. To make matters worse, liquidity is drying up, and fast. The Federal Reserve defines the M2 money supply as cash and everything deposited in current and savings accounts. Here, too, the supply of M2 money